Good evening. Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for the evening of Thursday, and we're at the 23rd of June, 2022. I'm watching these markets, and I see an attempt in the stock indices trying to rally. It makes a lot of sense. Nothing goes straight down, so a bounce, I can understand it. It looks to me like it should happen. In the futures, you tried to embed and you lost the ability in the S&P. So I can have a full argument here that the market tries to put on a short covering rally. I don't think it's going very far, but I do think it can show up. Another thing that's happening, the market's recognizing the monstrous decline that we've had in the futures markets in commodities, okay? So the commodity part. I won't call it deflation, but I'd say prices have been deflated. How's that? I think, I used that word deflation earlier in my financial market update for futures. I think deflated with an ED at the end would have been a much better word. We're not in price deflation. We're in a big correction. The markets had the combination of all this inflation, the Ukraine situation, all we heard every day, short supply of everything, and everything took off to the upside. But it's not completely true. The home builder, KBE, came out today, and what were they talking about? They pointed out something that people don't understand. The price of lumber's dropped 2/3. Copper just dropped 25% in value. Labor costs went up, but they're not advancing any further than this. They're probably stuck right where they're at. And other costs are starting to come down a little bit. So what's happening is those savings, because they were so inflated, go back to the bottom line. They can sell. Now the question is, can they find buyers that qualify at these high interest rates and have the cash to do so? Don't think that they're not out there. There's a lot of desperate people that want homes. They are qualified. They couldn't find them. And now they're finding, hey, maybe I can go out and buy a new home. We're even going to get some new home sales tomorrow. I'm not looking for it to be stellar. I look for new and existing home sales to be down, but I question if it's as bad as everybody thinks. I've got my doubts. Let's give a little credit to Citadel, moving out of Chicago. I live here. They, Deere, Boeing, they're all correct. We have a terrible mayor. Crime is rampant in this city. I've never seen anything like it. I was brought up in Chicago. She's an embarrassment, and he made a statement. Congratulations. Good move. So we get to Chewy here, and you can see how this market has just run up to the upside, getting up to the 36.65 level. It's probably ahead of itself a little bit. When I see the uptrend, I get it, but nothing just goes like that indefinitely. You're going to approach your first major resistance. The 45-day average is a nice resistance point, but it doesn't always act that way, as you can see. The 100 is a much more accurate one, and that's, you're knocking on the door at 37.39. Look for that to be the resistance area. And the fact that you've now got a couple of closes over the upper Bollinger Band puts it in rarefied territory. What do I mean by that? It's rare that you'll get beyond 5 days in a row consecutive closes over a Bollinger Band. Normally you hit it and you turn away, you spin back from it. You'll see this over and over. But when you get a trend that wants to lock itself in for a bit, you get that type of action. 5 will be the number that I don't think it'll do. I think you're at 3 right now, so I'm looking for some resistance. Plus you're overbought. I think the smart money's going to come out of the longs if they've not already done it. AMC, I'm giving you a fair warning. I keep pointing to this 5 level. If they can't make it out of the summer with a chart that looks a lot better than this, there's a big problem for AMC. Their debt load's going to be too big. I know that they sold a lot of shares recently. They've got more cash and they're building cash right now. But that means their model's not working. This is when, in the movie theater business, you make it or break it in the summertime. The next big holiday is going to be Christmas. You won't last between then and Christmas just on everyday movies. All the blockbusters are right now, one after the other. We're right at the beginning of summer. Don't count it out. This can be noise. Let's be fair about this. You've got to get into late August, and then you get real nervous about the movie theaters. In Apple, we're getting short covering. I can see it. You were oversold. You're getting a bounce, but there's nothing bullish on this chart. 141 level, that looks to me like a resistance point. What I do expect, though, is are they going to be able to launch? And that would be really a positive. I don't mean this in a negative way for Apple, the new phones. I'm going to line up as the first guy. I want that new phone. Mine's now, I think, iPhone 10. So it's time to get rid of it and move on. I do not upgrade my phone every year. I find most of it just a waste of money. My wife and I will rotate. I look at her. She always says either the newer one. I'm generally 2 or 3 generations back, and she's a camera freak, so she gets the new one literally all the time. In any case, that's where I'm going to look for the resistance up there. Disney. I am so surprised Disney hasn't done better. It's embedded. Until that red line pops over 21 on a close, I contend the pros are going to sell this market short. Now, I am aware that it's having trouble getting back down to the Bollinger Band. So at any point here, you can get more of a short covering rally. But the only way to get me out of my short ideas, and I keep telling my clients this, is get a reading over 21. You're nowhere near it. You're at 9.33. XLF. This is the financial services. I'm not bullish them. I'm still bearish. Market coming down. Now, you saw the Fed test today came out. Stress test for 34 banks. They passed with flying colors. Those banks are going to now be doing this. They'll take out their checkbook. More dividends. Let's give ourselves and everybody else. We did a pretty good job here. Bonuses, dividends. Come on, similar to what's going on now in the energy market. They're going to be, you know what I call it, pigs, and they're going to take that money. Industrial sector, still acting bearish. Oversold market, maybe it wants to embed. We got to wait and see if it does that. How do you know if it's going to embed? So let's take a look and see if I can get this out. It doesn't want to move there. It's staying with it. I'm not going to be able to change that for us today. XSD, which are the semiconductors. So Intel today went to the White House, president of it, and met with the president. And of course, he's going to say, hey, Joe, yeah, we want to do everything here. We were supposed to break ground today in Ohio on a new set of buildings, maybe up to 10 buildings. They're going to build semiconductors. But you can't seem to get Congress to get us this funding that we need and these bills passed. So let's put off the groundbreaking until July and see what you can do for us. That's really what's going on. They want to spend $20 billion, but they want the government, I think properly, to have their back. Why shouldn't we get behind semiconductors? Cadillac today, stop taking new orders for the Lyric. You want one for next year, you can get next year's, not this year's. Why? Out of semiconductors. You can't run a business this way. We can't run a country this way. What is wrong with our government from an understanding instead of, here we are letting everybody in over the border. We're saving money there. We're just letting people in. I don't know where all those people are working. They got to be working somewhere. Where's all the truck drivers we need? You're telling me that a lot of these people can't drive a truck? You don't even want to start me because I think they have no idea, the Biden administration, what they're doing. But here's another one. How else did the Biden administration today do their thing? And don't write me that I'm a Trump freak. I think I love the policies. The man, don't get me involved in that. On the other hand, today we're going to sit there and call in the refiners. First, I'm going to bash you for the past 30 days. Beat the heck out of you. Then I'm going to invite you in for a meeting, be it virtual, real. Hey, guys, you really got to produce more. Sure, I'm a refiner. Yes, Mr. President. Great meeting. You're right. I'm walking out of that room. What, is he out of his mind? Why would I invest billions of dollars to do anything when they're going to take it away from me the first chance? And God forbid he gets into office again. We have no shot. That's how they're thinking. Home builders, as I said, something going on here. The home builders, the smart ones, are realizing prices are coming down for the goods that make a house. There's always a market for people with money. Not everybody's scared of a 6% mortgage. They'll refinance. Let's get serious. If they can qualify, who said they can't refinance 2 years from now? So those that are looking at 41% increases in Miami as an example in rent this year, I'd rather buy a house. 41%. Gets worse. In Chicago, Citadel announced today they're leaving Chicago. I don't blame them. The crime here is insane. The taxes are insane. If you go 6 miles over the speed limit with a speed camera, you get a ticket instead of 10. The city's got its own way. You can't go to a beach. It's not safe. So under this mayor, we're a failure. Ken Griffin properly let her know that, and today he made his announcement. I think he wanted to stay here. I happen to know the homes that he's bought, the condos that he owns downtown. Know the man. I've met him. Beautiful. Okay, I get it. I think he would have stayed in Chicago. It's just an untenable position for his people. He's not the only one. Boeing, Deere, they'll get one or two to move in, the suckers. This is not a friendly place for business. We need to get a new face in Chicago. On the energy sector, falling apart, but between here and the 200-day average, you want to be getting out of shorts now. I would let the money on the table, walk away from this kind of market would be what I tell my clients. Why? You fought your first battle at the 100, you're letting go, but a 200-day average is a powerful number. Are we really in a bear market in energy? No, we're in a correction. And that correction won't be felt right now on the upside in a big way until we get more towards the fall. Right now it's going to be all about what? Refining, gasoline, and the refiners are making a killing. So they're in no big rush. They'll keep the refinery rates just enough, just like OPEC does, to make a heck of a lot of money without expanding. I'm not a big bear that thinks you're going to stay under that 200-day average. In the gold, I've been telling traders that this is where I think the pro money to go short, looking to see if it can get down to the Bollinger Band. Probably wise to take some money off the table. It dropped today $20 in gold. GDX now, these markets, the GDX, the SIL, they're all in trouble. And copper, now today, they went on strike yesterday, Codelco. That's the biggest copper miner in Chile. It was a 24-hour strike. The company caved in, reached an agreement with the miners. 50,000 of them had gone into the slow mode, and many of them were going on strike. Over. That puts more supply back on. This market didn't even bounce on that news. Did I not mention that to you? So you've taken this market down. Just think about it. You were a market roughly at $46, and you've taken a third of the value out of the market. This was supposed to be a tight market. Why is copper down? Because the world's in a recession. You don't have to believe me. I get it. You're going to wait for whatever the math tells you. You're in a recession. You're not going to see huge job growth anymore. Companies are not desperate. They're not going to hire the way you think. They've learned to make do because they can't hire people. You can't hire lifeguards in Chicago. Do you know our pools are closed? I'm not just complaining about our mayor. Why? Because they're paying $15, $16. The kids can get jobs at $20. What's going on? The mayor just picked up $45 million on tickets by changing it from 6 miles an hour, from 10 to 6. That's really what she's done. She can't hire lifeguards? This is why Ken Griffin's leaving, and he's right. Yes, I would like to leave too. AGG, you can see how the market here, the battleground, 18-day average. That's all I was looking for. TLT, BND, all of them, because you lost the embedded readings right here. We're due to get up, in my opinion, to the 18-day average, and that's what they've done. We then get to the dollar and the FXE, and I just see them drifting. They're not really making it easy to make a trade out of them one way or the other. If you get a buy signal, it's under the 18-day average. It's crazy. If you get a sell, you're over it. The market's not in what I'm going to call here in unison, making it easier for you to make a play out of that. But that's where I want to come in and help you. Because one of the things I do in the morning, unlike other brokers, I don't just write a newsletter. I do that for my futures trader. If I lay out a trade, I take you into the chart. Let's open it. Let's talk. Let's look at the daily. Let's look at the weekly charts, come up with game plans. I cover 40 markets and I rotate them all the time, trying to make it easy for you to take a look. I am not going to win every trade, and I'm not going to lose every trade. But I am going to have money management at work. I'm going to make sense of the chart. I'm going to explain the position to you. How many traders do you work with that do that for you? And you're not trading through me in spiders. You're just getting my service. So if you'd like to learn more from a seasoned pro, and yeah, I've been there, owned a stock company, been through this game, 53 years of doing this, I've learned a thing or two. All you have to do to get there now is go to our website, iraepstein.com, under the word research. It's right there. It's all explained. It's short videos. They explain what I do and how I do it. You can also take your cursor, move right up to the top here, and that'll do the job for you as well. Just click that on and you learn about this. Start your mornings off, learn about the markets, see the chart patterns. And by the way, with each subscription, if you have a question on a chart, just write me. I'll create a short video typically, answer your question on that chart, and away you go. What's it take me? 30 seconds to create it and give you the answer? How many other people doing that? I'm Ira. You have yourself a great evening. I'll see you tomorrow.